Let's shift focus to the primary market action. Yarn manufacturer Sanathan Textiles 550 crore IPO opens for subscription today, closes on the 23rd of November. It's 400 crore of fresh issue, 150 crore of offer for sale. We do have Mr. Paresh Dattani, who's the chairman and managing director of the company, and Sammir Dattani, who's the director of Sanathan Textiles, joining us in the studio. Thanks a lot, gentlemen, for joining in. Welcome to the stock markets, as they say. The important part, while you have you raise the money that you do, you have a lot of responsibility towards your shareholders, etc. as well. Two things in particular I want to ask. From the 400 crore rupees that you're raising, about 300 crore looks like it is going towards debt repayment, and 100 crores is for general corporate purposes. So the obvious question is, what is your consolidated debt right now? How much does it reduce by? And 100 crores in general corporate purposes, can you specify? Because 25% of your offer for sale going in for general corporate purposes is something that the street wants clarity on. How much will you spend where?
See, we have a 400 crore primary issue. Out of that, 300 crores we'll be paying back the debt. The peak debt that we'll have post the expansion that we are on, we are more than doubling our capacity. Once that comes into force, the peak debt will be about 1,400 and odd crores. We'll be paying up 300 crores, so we'll come to a peak debt of about 1,100 crores.
Okay, all right.
And the general corporate purpose expenses, we'll be using it mainly to fund our working capital margins.
Got it. All right. Welcome to the stock market, guys, and thanks a lot for coming down to the studio. So you'll have 1,100 crores approximately of consolidated debt post this payment. So your rough interest cost outgo would be at a percentage of what, 7 to 8% is what you're quoting?
So
it'll be approximately
about 75 to 80 crores.
75 to 80 crores.
And when does the debt peak? As in, where do we see the peak debt numbers reflecting on your books?
Peak debt numbers, once we commission the plant, this will be, it'll be coming in the first quarter, FY26.
Got it. All right. Hi, Sammir. Welcome to the show as well.
Hi.
Tell us, in terms of capacities, you're going to be doubling your capacity, I understand. As of last year, you did roughly around revenues of around 3,000 crores. If you're going to be doubling capacities and you're functioning at optimum levels, is there a potential that your revenues as well, optimum levels, you could do double the revenues, which effectively would be that around 6 to around 7,000 crores?
It makes sense, right? Because our current yarn capacity is 223,000 tons per annum.
Okay.
And over the next 3 years in a phased manner, we will be at 550,000 tons plus.
Okay.
And all of this expansion is planned. It's on ground. The first phase will start in April 2025.
Okay. So you're saying that, you have the potential, but do you think demand will be such that you could move towards that peak revenue number that you're talking about?
So there are two factors. First of all, the India demand is growing. The textile industry, as reported, is expected to grow at a CAGR of 7%. There is a massive PLI incentives the government of India has given. And all of that is mainly for downstream, for our customers, the fabric and garment manufacturers. Now, all of that will require a lot more yarns. And let's not forget, we have the Bangladesh opportunity for the Indian textile industry, which I think we will be able to convert. And plus adding to more exports of garments and fabrics requiring more yarns.
So, two factors to that. You said one is the strong demand from the end users of your products, and secondly, the opportunity is coming by. With you actually going ahead and increasing your capacity, there would be some operational efficiencies that you would generate as well, and the value-added products, which I see at around 50% of your overall sales. So you could give us a sense on your margins, because I look at your margins, they're all over the place. FY22, they were around 17%. Last year, they were down 8% with increase in value-added products, increase in capacity, etc. What is the sustainable margin that one should look at? Revenue, you've told me approximately, it could be close to around 6,000, 6,500 odd crores. What is the margin that everyone should work with?
See, we have consistently, if you look at 3 years, 5 years or 7 years, we have done about 10.5 to 11% EBITDA over the last 3 to 7 years average.
Yeah.
We don't look at it year-wise because post the COVID, the pent-up demand, that was 1 year, and then the geopolitical situations impacted the margins because of the exports. But over the last 3, 7, 10 years, we have consistently done 10.5 to 11% EBITDA.
So that should be more realistic. The 17% was an aberration, and on the downside, even 8% is an aberration. Both
I must tell you here also that with the expansion, we are going closer to the consuming centers.
Got it.
And we're going to be, at the moment, the only supplier there locally there.
Mangalam also asked you about, value-added products as a percentage of the total mix. Where do you see that number headed? And also, geographically, how do you see things change? I think exports are still smaller, do you see a potential of that as well going up? So
See,
percentage on both VAP as well as exports.
Our exports have typically, if over the years, ranged between 5% to 16%. This we move according to better netback margins. If we get better netback margins locally, we move here. We are not in a compulsion because we were stressing our assets fully. We were in a sole position. We didn't have material to supply. So in that choice, we always had to move whichever way we wanted.
Just a final question. You know, you did say that your volumes would increase by a certain amount when your capacity increases. I'm just looking at it from a simple, this is the money that I put in and this is what I get in terms of return. So your capex plan is close to around that 1800 crore mark.
That's right.
Typically, what is the asset turn on a business like that?
On an asset turn of polyester filament yarn, it's about 2.1 to 2.2 asset turn.
So,
And the cotton yarn gives you an asset turn of 1 to 1.1.
So roughly, this implies a revenue potential of 3600 odd crores?
In the first phase. And overall, when we complete all the all the phases, it'll come to about 4,400 crores revenue.
So currently you're doing about 3,000 odd crores,
Right.
4,400 crores. Say 3 years from now, we're looking at revenue of almost $1 billion with 10% margins. Is that a possibility?
That's a possibility.
Okay, very quickly, what about your return ratios? What is typical ROCE you'll work with?
Over the years, we have consistently got ROCEs of north of 20%.
Okay, and from a stock market perspective, they are a little uncomfortable with companies having a large debt. So do you think with the cash that you will generate over the next few years, you'll be able to repay this debt down from around 11,100 crores? Will the aspiration be that, say, in the next 4 years, that you'll virtually be debt-free? Could that be the direction?
Oh, if you look back at our history, whatever debt we have taken, we have always prepaid the debts and never restructured any debt. And this debt also, we intend to pay it off earlier.
Okay.
Alright.
All
And
right.
also, I would like to add, even at the peak debt, our debt equity will be at about 0.7, 0.8.
We'll hold you all to some of these numbers. And on listing, we request you all to rejoin on the channel and, in fact, give us more concrete numbers. But all the best, gentlemen. Thanks a lot for coming
Thank you
down
very much.
Thank you.
to the studio as well.
Thank you.